Eldorado Gold has seen its stock crash after further delays were announced for its oncoming Skouries gold mine in Greece. The equity tumbled by over 10% as a result of the delay, which has resulted in a cut to production guidance for 2025, while adding additional capital expenditures that were unexpected by the market. To add to the mess, production guidance has also been lowered at two other currently producing mines, further eroding investor confidence in the producer. Let's dive in. Okay, so let's start from the top. Production at Eldorado's Skouries project has been pushed back by roughly 6 months. While guidance had previously called for initial production to begin in the third quarter of 2025, which was already a delay from prior guidance of mid-2025, that timeline has now been pushed back to the first quarter of 2026. And whereas commercial levels of production were previously expected to be achieved by the year end of 2025, that timeline has now been pushed to mid-2026. The reason behind the delay is what Eldorado refers to as labor market tightness in Greece, which is particularly pronounced in construction. This tightness led to a slower than anticipated ramp up in workforce numbers, delaying progress at the developing mine. And that ramp up is still ongoing. Current plans call for a target of 1,300 workers on site through peak construction activities, and right now there's a daily on-site total of 1,150 workers as of the end of January. Workforce risk is expected to exist even once that target is hit, as the construction process requires a diverse set of skills, i.e. electrical, mechanical, concrete, tech, that the company may or may not have access to. Eldorado, as a result, has indicated that the revised production timeline remains subject to the ability of the company to secure the needed workforce. In other words, don't be shocked if there's further delays. And these delays, of course, come at a cost. But before we get into the cost issues on site, let's take a step back and provide some context on Skouries. The Skouries project, found in northern Greece, is one of several assets operated by Eldorado in country. The project consists of a high-grade copper-gold porphyry deposit that, once operational, is expected to have an initial 20-year mine life. Over that life of mine, as per a technical report completed in 2022, Skouries is expected to produce an average of 140,000 ounces of gold and 67 million pounds of copper a year at an average grade of 0.77 grams per ton gold and 0.5% copper. Given the copper credits associated with the mine, the cash costs of each gold ounce produced are said to be negative $365 an ounce, while all-in sustaining costs on a per ounce basis is said to be negative $6. Initial capital costs were estimated as being $845 million for Phase 1, while sustaining capital was pegged at $850 million. The net present value of the project was pegged at $1.3 billion while the IRR sits at 19% on an after-tax basis based on a 5% discount rate, $1,500 an ounce gold, and $3.85 a pound copper. Project payback was estimated as being 3.7 years. Finally, as of the end of 2024, Phase 2 construction was estimated as being 60% complete. That financial model, by all means, appears to be shot. The latest delays are said to add approximately $143 million to an already bloated capital expenditures budget, increasing total initial capital to $1 billion. On top of that, certain costs that were originally allocated to the sustaining capital budget, expenditures which were expected once production was already well underway, thus cutting startup costs, have been moved forward. A further $154 million in accelerated operational capital is now to be spent prior to commercial production being achieved, with the spending to be a result of Skouries acquiring higher capacity mobile mining equipment as well as pre-commercial production mining. In other words, the company now needs to make a further $297 million in capital expenditures before commercial production is achieved at Skouries. To date, $512 million of the total initial spend has been paid out, with $705 million said to be remaining in expenditures. Eldorado, however, is maintaining that the project is in fact still fully funded, given the fact they have $857 million in cash and cash equivalents and total liquidity available of $1.1 billion as of the end of 2024. The company in January also monetized their position in G Mining Ventures, generating proceeds of $155 million. Finally, there is of course a production impact, resulting in a guidance cut for Eldorado. Skouries was originally expected to contribute 50 to 60,000 ounces of gold and 15 to 20 million pounds of copper during 2025 production levels. For 2026, the mine was expected to produce 145 to 155,000 ounces of gold and 50 to 60 million pounds of copper. Guidance issued in 2024 overall had called for total gold production of 545 to 595,000 ounces in 2025, while in 2026 that production profile was to jump to 630 to 695,000 ounces. Now, Skouries is obviously expected to produce nothing this year. Next year, production is limited to 135 to 155,000 ounces, while copper production is slated to be between 45 to 60 million pounds. But it's not just Skouries that has seen guidance cuts. Kisseldag is expected to produce anywhere from 20 to 25,000 less ounces of gold in 2025, depending on if you're looking at the high or low end of guidance, while Olympias is expected to produce 15,000 ounces less this year. Overall, gold production is estimated to be between 460 to 500,000 ounces this year, which on a midpoint basis is a decline of 90,000 ounces. For 2026, guidance estimates a decline by 32,500 ounces on a midpoint basis, while guidance for 2027 has declined 15,000 on a midpoint basis. All right, so let's wrap it up. The delay at Skouries wasn't good news for investors, but it's helpful to look at things from the big picture here sometimes. This is a long life asset that's going into production with a considerable annual production profile. A delay of 6 to 9 months in the grand scheme isn't the worst thing in the world, so long as things get to where they should be when production begins. And to add to that, the economics worked out at $1,500 an ounce gold. Under the current gold environment, it wouldn't be shocking if we saw $3,000 gold this year. So will the effort pay off? It's almost a resounding yes. So while the stock has been hit hard by the delay and the near-term guidance cut, it's probably not the end of the world. All right, everybody, thanks for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Also, if there's stories you want us to cover, please let us know in the comment section. Thanks for watching, everyone.